This example, right? Let's say 10 people all had $100,000 and all of us want to invest in real estate. Well, we could all buy 10 single family homes or whatever we want to get separately, right?
Hmm.
And we can buy that and manage it ourselves or hire a property management company. What we do is the 10 of us, instead of doing it individually, we come together. So now instead of $100,000 each, we now have $1 million. And we take that $1 million and we may go get us a $3 million property, right? So we got our down payment, a little bit of money for reserves. And now we can have a professional property management company. Maybe one of us manages that property management company, and the rest of us get the same benefits of being owners without having to do the day-to-day elements of it. So what
Mm-hmm.
essentially happens is we create an LLC, and our investors own shares of the LLC, which owns the real estate. And they get all the perks of owning the real estate, which is, again, the tax breaks. So we get our depreciation, our bonus depreciation, all that passes through directly to our investors. It is a passive income, so it qualifies for all of that from a tax standpoint. But they get the direct ownership. So again, they get to take all of that, but because they're in a limited position, they actually don't have the same exposure. So they're a limited partner, which means that if there were any lawsuits or anything like that, they're not personally liable for any of those kind of things. The company takes that on. The general partnership partners have a little bit of exposure, but the limited partners have no more exposure in that. So that's a little bit different than if you were to invest in a property yourself. Obviously, you
Yeah.
want to get insurance or you want to get other things to protect yourself. But in this case, there is a little bit of separation that happens. And I would say, the people who tend to invest with us are people who are either busy professionals who get real estate but don't really want to be a landlord themselves, are
Hmm.
looking more for the long term. They want a combination of cash flow as well as upside appreciation. They want the tax benefits. And to give you a little context, on most of our deals, if you were to invest, let's just say $50,000 in a deal of ours, typically we are providing about $20,000 to $25,000 in paper losses. Now, again, that's not guaranteed, but that's a paper loss, which means you're able to take that off of other passive income that you have. So, for some of our really sophisticated investors, they love to invest just to get the paper losses so they can reduce their tax liability.
Hmm.
So, there's a lot of different reasons. We have folks who are maybe in retirement, but I would say who there are people who should not invest with us too, right? Again, if you really want to be hands on and make all the decisions yourselves and see the property, this is not what you want to do because you're not going to have that
Hmm.
access, right? If you
Yeah.
have very limited capital, you don't have the money to invest. Well, every investment has risk, and our minimum investment is $50,000. So that is one thing that is a barrier. So for some of those folks, it may not be a good fit. But I would say too, whether it's with us or even the stuff you're doing, again, people sometimes have retirement dollars that they can access, and people may not know that a lot of times you can roll over those retirement dollars into a self-directed account and then use that to invest in real estate. Now, that can't be for self-dealing. You can't go live in the property,
Correct.
but you
Yeah.
can invest if it's a true investment. You can do it as an investment vehicle. So I'm a firm believer of live where you want to live. California is one of the most beautiful places in the world. Definitely one of the most beautiful states that we have in the U.S. So if you want to live in California, it makes a ton of sense. But invest where it makes sense for you. If you could be hands
Hmm.
on and navigate the landlord ordinances in your market, by all means do that. If you don't have the time, the energy, or you're just not comfortable with it, then invest outside of that area, which I know a lot of people do. But that's where it
Yeah.
makes sense to maybe partner with a group like ours as opposed to trying to take that on yourself.
There's just so much to just that nutshell that you just shared there at the end. It's like the possibilities that you can do. Talk to your CPA, folks. If you have your IRA, your whatever other retirement accounts you might have and investments, because there are things that you technically can do with it. But I, as a licensed real estate broker, cannot tell you what to do with this. I can tell you talk to your tax attorney or your tax preparer, anybody. Let them do the explanation for you. Be taking investment into your property and also taking a tax benefit from it. And that's what you can do with the mortgage that you cannot do with rent. So when people are concerned, it's like, well, I don't want to get into commitment, even at a limited level. I don't know. That's a big commitment. Well, let me ask you this: when are you going to pay off your rent? You don't. There's no end game. You might as well start a plan.